I want you to imagine this moment. A president stands in the White House, not with generals or diplomats, but with oil executives. And he says something extraordinary: total safety, total security. Not for a country, not for a people, but for capital. I'm Fareed Zakaria. And what just happened in Venezuela is not merely a foreign policy episode. It is a revelation about how power works in the modern world. After Nicolás Maduro's arrest, Donald Trump didn't speak first about democracy or reconciliation. He spoke about oil, about billions, about speed, about opportunity. Venezuela, home to the world's largest crude reserves, is suddenly described not as a tragedy, but as a deal. And here's the uncomfortable truth. When governments fall, markets move faster than morals. If you want to understand how geopolitics, energy, and profit collide in the 21st century, stay with me, and if this perspective sharpens how you see the world, subscribe now. Because to understand what comes next, we must first understand what this moment really represents. And that takes us deeper, much deeper. Let's be clear about what this moment is and what it is not. This is not simply about rebuilding Venezuela's oil fields. It is about redefining the relationship between power, profit, and legitimacy. Trump is offering something rare in global capitalism: a state-backed guarantee that risk has been neutralized. In plain terms, he is telling oil companies that politics will no longer be an obstacle. Courts will be sidelined. Past losses will be forgotten. Legal uncertainty will be rewritten. The phrase he used, an even plate, is not accidental. It signals a clean slate, not for the nation, but for investors. Executives hear this language clearly. Some express enthusiasm. Others caution that Venezuela remains uninvestable unless the legal and commercial rules are transformed. And that is the key point. This is not a promise of oil. It is a promise of control. When a government says it can deliver security, speed, and protection, capital listens even when history suggests caution. And that brings us to the deeper question: how did Venezuela reach a point where its future could be negotiated this way? To understand that, we have to step back, not years, but decades. Venezuela was not always a cautionary tale. In the late 1992s and early 2000s, oil transformed the country into a regional power. Revenue flowed, ambition grew, and then came a decisive turn: the reassertion of state control. Under Hugo Chavez, foreign assets were nationalized. Contracts were rewritten. The state reclaimed dominance over oil not just as an industry, but as a political instrument. For a time, it worked. High prices masked structural weaknesses. Institutions eroded quietly. But oil is unforgiving to mismanagement. As infrastructure aged and investment dried up, production collapsed. Expertise left. Maintenance stopped. What had once been abundance became decay. By the time Nicolás Maduro inherited power, the system was already hollowed out. This is the cycle that resource economies fear most. When control replaces competence and ideology replaces incentives. By the time the United States intervened, Venezuela was not just struggling, it was brittle. And brittle systems, when they break, don't reform gradually. They shatter, which leads us to the first shock, the moment everything accelerated. Then came the rupture. Maduro's arrest was not just a political moment, it was an economic detonation. Overnight, uncertainty flipped into momentum. Phones rang. Boardrooms recalculated. What had been frozen for years suddenly looked fluid. Trump moved fast. He spoke in absolutes. Total safety, total security. He promised speed production boosted within 18 months. He framed Venezuela not as a legal minefield, but as an open frontier. And he applied pressure. If the companies in the room hesitated, he warned there were 25 others ready to step in. This was not diplomacy, it was leverage. But here's the deeper meaning of this crisis. It revealed how modern power works. Military success created narrative certainty. Narrative certainty created market confidence. And market confidence, in turn, justified political decisions already made. Executives responded carefully. Optimism, yes, but conditional. Venezuela, they said, remained uninvestable unless laws, courts, and contracts were rewritten. The crisis did not erase risk. It simply relocated it from corporations to the state. If this analysis helps you see how crises become opportunities, share it. These patterns matter because what looks like chaos on the surface often hides a very precise design underneath. And that design is what we need to examine next. Behind the rhetoric of rescue lies a quieter, more consequential architecture. Trump's offer to oil companies was not just protection on the ground, it was protection in law. An executive order moved to shield Venezuelan oil revenue held in U.S. Treasury accounts from courts and creditors. In effect, the rules of accountability were suspended selectively. This is how systems truly change, not through speeches, but through legal engineering. For years, companies like ExxonMobil and ConocoPhillips had unresolved claims after their assets were nationalized. Billions were owed. Courts were the arena. Now, Trump suggested a reset. We're not going to look at what people lost in the past. History in this framing becomes an inconvenience. The message was unmistakable. Future extraction matters more than past injustice. This mechanism, state-guaranteed immunity paired with profit access, is what transforms an uninvestable country into a magnet for capital. Risk is not eliminated, it is reassigned. But systems built this way carry a cost. When law bends to power, trust becomes conditional. And when trust is conditional, stability is fragile. The question is no longer whether oil can flow again. It's whether a nation can be rebuilt on foundations designed for speed, not resilience. And that brings us to the second, more dangerous surge. The second surge is more volatile because it reaches beyond oil fields and boardrooms. Trump made clear that Venezuela's crude would not just be extracted, it would be used to push prices down, used to cut US oil to $50 a barrel, used as a global lever. This is where economics becomes geopolitics. Oil markets are already saturated. Prices are soft. A sudden surge from Venezuela doesn't just help consumers, it destabilizes producers. Allies feel it. Rivals react to it. Supply shocks don't happen in isolation. And notice the speed again. 18 months. That promise ignores a stubborn reality. Infrastructure decay cannot be reversed by optimism alone. Pipes corrode, skilled labor doesn't reappear overnight. Legal trust doesn't materialize on command. Executives know this. That's why their optimism is careful, conditional, measured. Yet political momentum rarely waits for engineering reality. The second crisis is not about whether Venezuela can produce oil. It's about whether the rush to produce creates new fractures, economic, legal, and social, before the country has time to heal. When markets move faster than institutions, pressure builds. And pressure, sooner or later, finds people. That is where the real story begins. If you live far from Venezuela, this may still touch you more than you think. Because when oil becomes the organizing principle of recovery, people become secondary variables. You, the citizen, the worker, the family, are asked to wait while systems reset above your head. Imagine what that feels like. A nation told it will be very successful while decisions about its future are negotiated in foreign boardrooms. Promises of prosperity arrive faster than food, electricity, or trust. Oil money can stabilize a state, but it can also distort it. Jobs return unevenly. Prices shift unpredictably. Expectations rise faster than institutions can deliver. And when hope is inflated too quickly, disappointment cuts deeper. This is the human cost of speed. You are not anti-growth for questioning this. You are not anti-progress for asking who benefits first. These are the questions that decide whether recovery empowers people or merely pacifies them. If this resonates with you, don't just watch, share it. These stories matter when they are heard. Because what happens to people inside Venezuela will determine whether this gamble succeeds or collapses under its own weight. And the world is watching more closely than it admits. Venezuela's reopening does not stay contained within its borders. It never could. Oil is global by definition. Every additional barrel ripples outward into prices, alliances, and power balances. A Venezuela aligned with US energy strategy reshapes leverage across the world, from OPEC calculations to rival producers who suddenly face cheaper supply. This is why intervention has mixed historical results. When foreign power unlocks production, output may rise, but stability rarely follows a straight line. Markets adjust quickly. Politics does not. A surge of Venezuelan crude pressures countries already struggling to balance budgets. It complicates coordination. It invites counter moves. Energy becomes a bargaining chip once again, not just for profit, but for influence. And there is a deeper signal here. If control of resources can be asserted indefinitely, as the White House suggested, then sovereignty itself becomes conditional. Not abolished, but managed. That precedent matters because other fragile states are watching. So are investors. So are governments calculating whether collapse might someday be followed by protection and profit. This is no longer only Venezuela's story. It is a chapter in how power is exercised globally now. And that leads us to the hardest question of all. What comes next? When we look ahead, three paths emerge, not as predictions, but as possibilities shaped by choices already in motion. The first is the optimistic scenario. Investment flows steadily, legal reforms take root, infrastructure is rebuilt methodically, not recklessly, oil revenues are managed with restraint. In this version, Venezuela stabilizes not because oil saves it, but because oil buys time for institutions to recover. This is the hardest path. It requires patience, discipline, and something markets cannot enforce: trust. The second path is the middle road. Production rises, but unevenly. Legal guarantees hold just long enough to sustain extraction, not long enough to rebuild legitimacy. Growth appears in numbers, not in daily life. The country functions, but it does not heal. This is the most likely outcome. Systems survive, people adapt, fragility remains. The third path is the darkest. Speed overwhelms structure. Oil floods the market, but governance lags, expectations collapse, political resentment resurfaces. What was meant to stabilize becomes another cycle of dependency, faster, harsher, and harder to escape. History teaches us this. Resources amplify what already exists. They do not correct it. And that insight brings us to the final reckoning. So let's step back and ask the question that matters most. What is Venezuela really being offered? Security for investors, speed for markets, and the promise that oil can once again organize a nation's future that may produce growth, it may lower prices, it may benefit consumers far away. But oil does not build trust, power does not create legitimacy, and protection, when granted selectively, always carries a price. I've covered global politics for decades, and one lesson repeats itself. When recovery is engineered from the top down, it can stabilize systems, but it rarely restores dignity on its own. Venezuela now stands at a crossroads, not between socialism and capitalism, but between extraction and reconstruction, between short-term gain and long-term sovereignty. If you want to understand how this story unfolds, not just here, but everywhere, power and profit collide, stay with this channel, subscribe, share this perspective, because what happens next in Venezuela will not be an exception. It will be a precedent,